Just, for example, today's announcement of AMD acquiring ZT Systems just tells you what a commanding lead and advantage NVIDIA has. It's forced AMD to provide that full stack software with this acquisition of Silo AI and now ZT Systems. So we're still confident in NVIDIA. Of course, they'll be reporting next week, and we'll see if they provide some good guidance. But we're still confident on that front.
Goldman Sachs is doubling down on NVIDIA with a thrilling conviction buy rating and a robust $135 target. As we eagerly await NVIDIA's fiscal Q2 results on August 28th, the tech giant's position in AI and accelerated computing remains unshakable, driven by soaring demand from major cloud service providers. Despite a slight delay in NVIDIA's next-gen GPU architecture, Blackwell, Goldman Sachs remains bullish, projecting an 11% earnings boost for 2025 and highlighting NVIDIA's impressive resilience. With its stock trading at a comparatively low premium and a perfect Petrosky score of 9, NVIDIA's future looks brighter than ever, making it a prime candidate for investors ready to capitalize on its unstoppable momentum. So let's dive into the details and find out, why does Goldman Sachs remain bullish on NVIDIA? But first, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
I think that the earnings report, I think all eyes are on NVIDIA's earnings report next week. And the question is, can it continue to deliver the amazing earnings per share growth that it's had, 455% last quarter, year over year. And everyone's going to be watching that to see how big this AI follow through is going to be. And I think it's going to be a healthy report. I can't predict if we're going to miss by 2 cents, or they've been beating pretty regularly. So if it's another beat, the market is going to be happy.
Goldman Sachs maintained NVIDIA at conviction buy with steady stock target. On Monday, Goldman Sachs reiterated its conviction buy rating on shares of Nvidia Corporation with a price target of $135. It expects NVIDIA's fiscal second quarter results, scheduled for release on August 28th after the market close, to boost investor confidence in the company's earnings potential. Goldman Sachs expects management commentary and upcoming supply chain data to boost NVIDIA's earnings outlook despite a reported delay in Blackwell, NVIDIA's next-generation GPU architecture. The analyst noted that NVIDIA's competitive position in AI and accelerated computing remains strong, supported by robust demand from large cloud service providers and enterprises. According to Goldman Sachs, NVIDIA's non-GAAP earnings per share, excluding stock-based compensation, will be $4.16 in 2025, 11% higher than street expectations. NVIDIA's stock trades at 42 times next 12 months consensus earnings per share, which is only 46% higher than its past 3-year median of 151%. Based on NVIDIA's updated bull-bear framework, the shares offer a good risk-reward balance. As per the firm, NVIDIA's earnings power and competitive edge in key growth areas will drive stock performance in the coming years. Investors are expected to pay close attention to NVIDIA's forthcoming quarterly results and management's insights on future growth prospects. Given NVIDIA's recent stock surge of over 20% and the company's strong earnings power and competitive edge in key growth areas, how do you anticipate the forthcoming quarterly results and management's insights will influence investor sentiment and further impact the technology sector's recovery, particularly in light of the positive economic indicators such as retail sales, inflation, and producer prices? Let's find out. Hello, everyone, and welcome back to Investocracy.
And so NVIDIA is going to go higher. It's still a darling. It's still the stock that is the go-to. But so many people forget that semiconductors on another level, even the ones that are high-end and for these really sophisticated data centers, and there's still a commodity. It's still a commodities business, which means it's about pricing and so ultimately, they'll go down in the end.
In other recent news, the technology sector, especially chipmaker Nvidia, has seen a significant recovery, with the firm's shares surging by over 20%. Several economic indicators have contributed to the stock market's resurgence, including retail sales, inflation, and producer prices. Analysts at Edward Jones and BNP Paribas have expressed cautious optimism about the economic outlook, noting the positive direction of recent economic data. In September, traders are reducing their bets on a significant rate cut from the Federal Reserve. As September approaches, a historically volatile month, caution remains. An earnings report from Nvidia and an employment report are upcoming events that investors are looking forward to. As for investment strategies, Soros Capital Management sold off its stakes in Microsoft and Advanced Micro Devices. Meanwhile, the Saudi Public Investment Fund increased its stake in Brazilian digital bank Nu Holdings. South Korean retail investors, often referred to as ants, continue to favor U.S. stocks over their domestic market, showing a strong preference for U.S. tech giants like Nvidia, Tesla, and Apple. Global investors can benefit from these recent developments in the stock market. As Nvidia Corporation prepares to release its fiscal second quarter results, the Investing Pro platform offers a nuanced look at the company's financial health. Based on Investing Pro data, Nvidia has a market capitalization of $3,060 billion. As of Q1 2023, Nvidia's revenue grew 208.27% over the last 12 months. In Q1 2023, revenue grew 262.12%, underscoring the company's robust performance despite market challenges. InvestPro tips suggest that Nvidia's stock has experienced a significant return over the last week, with a price total return of 14.27%, indicating strong investor confidence leading up to the earnings report. Analysts also expect sales growth, which aligns with Goldman Sachs' optimistic outlook for Nvidia's earnings. A perfect Petrosky score of 9 shows Nvidia's solid financial health, which could further reassure investors about its stability and growth potential. So what does all of this mean for Nvidia stock investors? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
A whopping number for you, 591,000%. That's how much Nvidia stock has increased in value since it went public in the early 2000s. And now the chip company has surged its way all the way to the top of the stock market, dethroning another tech heavyweight, Microsoft, to become the world's most valuable company by market capitalization. And this just weeks after Nvidia was in third place. It overtook iPhone maker Apple last week. Now, much of this growth has happened this year alone, taking the company from a $1 trillion company to a $3 trillion company within a matter of months, and lifting US stock markets to record highs in the process. The stunning surge is all down to the optimism around emerging AI technology and the demand for high-end processors, the type of kit that Nvidia makes chips for and that support artificial intelligence technology. All the tech giants, Microsoft, Meta, and Google owner Alphabet, are all competing to build out their AI computing capabilities and add the technology to their products and services. Now, it does seem that Nvidia is unstoppable, but some people are concerned about the sky-high value of the company, and also they fear that the demand for AI technology and the spending around it might wane in the future. So they are cautious, even though there is this very high valuation.
Goldman Sachs analyst Toshiya Hari anticipates strong earnings for Nvidia ahead of its August 28th fiscal second quarter results. Despite a delay in the shipment of new Blackwell AI chips, Hari remains optimistic about Nvidia's growth, citing demand for its Hopper-based GPUs and strong performance in the data center and networking sectors. He rates Nvidia as a buy and lists it on Goldman's conviction list. The consensus rating for Nvidia stock is a strong buy, with an average price target indicating an 11% potential return. Nvidia's rise from a run-of-the-mill chip giant to one of the world's biggest companies has been built on a series of blockbuster earnings reports. Wall Street was initially caught off guard, but now these trends are almost a given. With the company preparing to report its fiscal second quarter results on August 28th, can investors expect the sun to keep on shining on Nvidia? Goldman Sachs' Toshiya Hari, an analyst ranked among the top 1% of Wall Street stock experts, seems to think so. The five-star analyst said, "We expect management commentary coupled with supply chain data points over the coming weeks to lead to higher conviction as it pertains to Nvidia's earnings power in calendar year 2025. However, Nvidia faces a potential bump in the road. A design issue has delayed the shipment of its new Blackwell AI chips, raising concerns about potential growth slowdowns in the October and/or January quarters." Hari notes that the impact on Nvidia's data center business will depend on several factors, including the length of the delay, whether it will be resolved quickly or if the issue is more fundamental, and whether customers will choose to go with Hopper-based products like the H100, H200, or hold out for Blackwell. Despite this, Hari remains optimistic. He expects the market to overlook any negative impact from a potential delay in the Blackwell ramp, predicting that Nvidia will still deliver strong sequential growth in data center revenue. This growth will be driven by ongoing demand for its Hopper-based GPUs, H100, H200, H20, early shipments of Blackwell-based products, and expansion in its networking business, particularly from the ramp-up of Spectrum-X, an Ethernet-based product. Hari also thinks Nvidia's position as the undisputed AI chip leader is safe for now. Importantly, he says, "We believe customer demand across the large cloud service providers and enterprises is strong, and Nvidia's robust competitive position in AI-accelerated computing remains intact. As far as the shares are concerned, Hari thinks the setup for Nvidia is constructive. With the stock exhibiting a favorable risk-reward balance, Hari rates Nvidia as a buy, while maintaining its place on Goldman's conviction list. Most analysts agree with Goldman's stance. Nvidia stock claims a strong buy consensus rating, based on 37 buy recommendations versus only 4 holds. The average price target stands at $144.17, which makes room for 12-month returns of 11%. So things are looking pretty good for Nvidia. Get ready for Nvidia's fiscal Q2 results. On August 28th, Goldman Sachs is backing the tech giant with a conviction buy and a bold $135 target. With Nvidia's dominance in AI and accelerated computing showing no signs of slowing, the stage is set for another stellar performance. Despite a minor delay in their next-gen GPU, Blackwell, the outlook remains incredibly positive. As Nvidia continues to lead and deliver impressive returns, investors should stay tuned and seize the opportunity to ride the wave of Nvidia's unstoppable growth. So will Nvidia's upcoming fiscal Q2 results surpass expectations and keep the momentum going? What are your predictions? So, will you catch this upside moment? Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there!